Today we answer the question, what really happens to your home after the last borrower dies when you've secured a reverse mortgage? I'm Mike Banner, and welcome to the Reverse Planet. Today we answer the question that has plagued the reverse mortgage industry for decades. What truly happens to the home after the last borrower dies when those borrowers secured a reverse mortgage years ago? Though our detractors would have you think many things, from the wild accusation that the bank takes it or that you split the equity with the bank to your heirs, simply none of this is true. You're going to be amazed at the true answer, and here it is. Since only the borrower is entitled to a home in a reverse mortgage, again, contrary to what our detractors say, where the home goes after the death of the last borrower is always decided by the borrowers, by their will, by their trust, by their estate attorney. The reverse mortgage lender has nothing to do with the disposition of your home after you leave this world. Surprising, isn't it? But it's the truth, and I'm going to repeat it. The reverse mortgage lender has nothing to do with the disposition of your home after the last borrower dies. Let's just say in a normal case, your will, your estate, your trust says your home goes to your children. Well, your children are going to have two options at that particular point. They're going to contact the lender, and the lender is going to say to them, there is a mortgage on this property. The people that secured that mortgage are gone. So you, as your heirs of your mom and dad, or your grandmother and grandfather, you have two options. The first option is, if you'd like to keep this home, you have to pay off the mortgage. Your second option is, if you do not want this home, then you need to sell the home. They need to sell the home and pay off the existing debt. Do those two options sound familiar? They're the same exact two options that your heirs or estate would be given in a regular mortgage. No deep mystery here, regardless of what our detractors say. But that's not where it stops. Let's go one step further, because there are two more options given to your heirs, your children, when mom and dad had secured a reverse mortgage. Number one, let's say when they get the house, they're upside down. What does upside down really mean? In a nutshell, means they owe more on the house than it's worth. We were in another recession. Values went down. Suddenly there is a deficit balance. Well, in a regular mortgage, which mom and dad signed personally for, that lender is going to say to your children, well, you're $50,000 upside down. How are you going to pay that off? Very difficult. Do they have to liquidate other assets? Did you leave them life insurance? Was there money in annuities, stocks and bonds? That is the question that the regular forward lender is asking your children after your death. Since today's reverse mortgage is a non-recourse loan, your heirs or your estate are not responsible for that negative. So if in fact there is a negative, let's say your home is $50,000 or $100,000 upside down, none of your assets can be touched. And yes, your children would have an option of saying, we don't want this house. It's upside down. It's not in a location that we would like to live in. And they can say to the lender, here are the keys. Where do we send them? Under federal guidelines, the lender is not even allowed to ask about other assets available to make up that shortage. Very different than a conforming forward loan. But let's go for the next option, which is going to surprise you as well. One of the children says, yes, we like this home. It's in Florida on the golf course. It's in San Diego on the water. It's in New York near the city. We want this home, but it is upside down. Again, in a traditional loan, a forward loan, the bank is going to go say, of course, if you'd like the loan, if you'd like the free and clear title, go borrow money on your own, get a mortgage so you can purchase this home. But the house is upside down. And no matter how wealthy you are, And no matter how high your credit score is, no one's lending you money on a house that's upside down. But in today's reverse mortgage, any member of the estate or heirs can purchase that home for 95% of the then present value. That's worth repeating and giving a small example. Let's say the home is worth $400,000. But because we're in a recession and mom and dad live to be well into their 90s, the balance is $500,000. The house is worth $400,000. The balance is $500,000. They're $100,000 upside down. In this particular case, after an independent appraisal is obtained, your heirs can purchase that home for 95% of the then present $400,000 value. 95% of $400,000 is $380,000. They or your estate will not be responsible for the remaining $120,000 negative deficit on that mortgage. So to repeat very quickly, what happens to a home when the last parent dies and the home is passed on to the heirs when mom and dad secured a reverse mortgage? The children are given two options. Number one, if you'd like to purchase the home or pay off the home because you'd like to keep it in the family, pay off the mortgage. If in fact you do not want to do that, place the house for sale with your favorite real estate agent, sell the home, pay off the mortgage, and pocket the profit, just like a regular mortgage. But there are two other options. If the house is upside down, if it is in a negative position, your children and estate are not responsible, and the reverse mortgage lender can never touch your other assets. Life insurance, annuities, stocks and bonds, savings, all untouchable by the reverse mortgage lender because a reverse mortgage is a non-recourse loan. And of course, your second option, yes, we want to purchase that house. My brother, my sister, my son would like it. Then you can purchase that house for either what it's owed on or if there's a deficit balance, 95% of the then present value. So now you know the truth of what happens to a reverse mortgage after the last borrower dies. And it's nothing like you thought. It is a win-win situation. Either mom and dad live there the rest of their lives with no debt service and then pass it on to their heirs who sell it at a profit, or mom and dad live there the rest of their life with no monthly debt service, and when it's passed on to their heirs, it is upside down, but the heirs are not responsible for that deficit, and they send the keys back to the lender, or the children can purchase it for 95% of the then present value if the house is upside down. Surprising. A win-win-win situation for mom and dad, for their heirs, and for their estate. Thank you very much. If you'd like more information, please contact me at mbanner@thereverseplanet.com, or if you'd like to find out more, and if you'd like to know if you qualify for a reverse mortgage, click on the link below. Thank you.